In the modern digital economy, data is the new oil, and Vertiv Holdings is the refinery. Tracing its roots back to the Emerson Network power brand, Vertiv has emerged as a global leader in providing the critical infrastructure that keeps the world's most vital applications running. Headquartered in Westerville, Ohio, this NYSE-listed giant specializes in hardware, software, analytics, and ongoing services that ensure its customers' vital applications run continuously, perform optimally, and grow with their business needs. As we enter the era of artificial intelligence, Vertiv has positioned itself as the indispensable backbone for data centers, communication networks, and industrial facilities worldwide. Today, we analyze why Vertiv has become a top-performing stock and what the future holds for this infrastructure titan. Vertiv's business is built on three pillars: critical infrastructure, solutions and services, and integrated systems. At its core, Vertiv provides the uninterruptible power supply, or UPS systems, that prevent data loss during power outages, as well as thermal management systems that keep high-performance servers from overheating. These aren't just commodities, they are high-engineering solutions designed for 99.999% reliability. Their portfolio includes everything from the Liebert brand of cooling to Geist rack power distribution units. This integrated approach allows them to serve as a one-stop shop for hyperscalers like Amazon, Google, and Microsoft, as well as co-location providers and enterprise customers who cannot afford a single second of downtime. The financial trajectory of Vertiv has been nothing short of remarkable. In 2023, the company reported net sales of approximately $6.86 billion, representing a 21% organic growth rate. But it's not just about top-line growth. Vertiv has significantly expanded its margins. The adjusted operating margin reached 15.3% in 2023, up from 7.7% just a year prior. This massive jump in profitability was driven by pricing power, improved supply chain efficiency, and a favorable product mix. Investors have responded enthusiastically, as Vertiv stock has outperformed major tech indices, reflecting the market's confidence in their ability to translate the massive demand for data infrastructure into high-quality earnings and free cash flow. The explosion of generative AI is the single biggest tailwind for Vertiv. AI workloads require significantly more power and generate far more heat than traditional cloud computing. A typical AI rack can consume 5 to 10 times the power of a standard server rack. This shift forces data centers to undergo massive upgrades. Vertiv is at the forefront of this transition, offering the specialized power and cooling infrastructure required for NVIDIA's H100 GPUs and beyond. Their AI-ready solutions are designed to handle the high-density power requirements that are now becoming the industry standard. As companies race to build out AI clusters, the lead times for Vertiv's equipment have extended, indicating a robust and long-term backlog. As chip power densities continue to climb, traditional air cooling is reaching its physical limits. Enter liquid cooling, the next frontier for data center efficiency. Vertiv has invested heavily in this space, acquiring companies like Coolterra to bolster its liquid-to-chip cooling capabilities. By using coolant distribution units, or CDUs, and immersion cooling, Vertiv can remove heat much more efficiently than air ever could. This is critical for the sustainability goals of big tech companies, as liquid cooling can reduce a data center's power usage effectiveness, or PUE. Vertiv's ability to provide a hybrid approach, mixing air and liquid cooling, allows existing data centers to transition to AI workloads without starting from scratch. Vertiv operates in a competitive landscape alongside giants like Schneider Electric and Eaton, but it maintains a unique advantage through its pure-play focus on data centers. While competitors have large residential or industrial electrical divisions, Vertiv is laser-focused on the digital infrastructure niche. This focus allows for faster innovation and deeper technical partnerships with chipmakers and hyperscalers. Furthermore, their global service network is a massive moat. With over 3,500 field service engineers worldwide, Vertiv can guarantee rapid response times, which is the #1 priority for data center operators. This global scale, combined with specialized expertise, makes it incredibly difficult for new entrants to disrupt their market share. In the wake of the 2021-2022 supply chain disruptions, Vertiv's management underwent a strategic shift to improve operational resilience. Under the leadership of CEO Giordano Albertazzi, the company implemented a regional-for-regional manufacturing strategy. This means they build products closer to where they are sold, reducing lead times and shipping costs. They have 20-plus manufacturing centers globally, allowing them to balance load and mitigate geopolitical risks. This operational excellence has been a primary driver of their recent margin expansion. By streamlining their procurement and standardizing designs, Vertiv has managed to keep up with the unprecedented surge in demand while simultaneously improving their bottom line. Management execution is the secret sauce behind Vertiv's stock performance. CEO Giordano Albertazzi has focused on a culture of high performance and accountability. The executive team has prioritized margin over volume, meaning they are selective about the projects they take on, focusing on high-value, high-margin solutions rather than low-cost commodity components. Their strategic roadmap involves expanding their footprint in edge computing, where data is processed closer to the user, and continuing to innovate in energy storage solutions like lithium-ion battery cabinets. By staying ahead of the technology curve and maintaining a disciplined financial approach, the leadership team aims to deliver consistent double-digit earnings growth for the foreseeable future. No investment is without risk. Vertiv faces several challenges. First is the cyclical nature of capital expenditures. If big tech companies slow down their data center spending, Vertiv will feel the impact. Second is the competition. Schneider Electric and Eaton are formidable rivals with deep pockets. Third is the volatility of raw material costs, such as copper and aluminum, which are essential for their power and cooling products. Additionally, as the company expands rapidly, managing a global workforce and maintaining quality standards across 20-plus factories requires intense management oversight. Investors must also consider the valuation. After such a massive run-up, the stock trades at a premium, leaving less room for error in future earnings reports. In conclusion, Vertiv Holdings is a rare breed, a legacy industrial company that has successfully pivoted to become a high-growth tech play. Its dominance in power and cooling infrastructure makes it one of the most direct ways to play the AI revolution. While the stock has already seen significant gains, the fundamental story remains strong. Data centers are becoming the most critical assets of the 21st century, and Vertiv is the company that keeps them breathing. For business professionals and investors, Vertiv represents a strategic bet on the continued expansion of the digital universe. As long as the world needs more compute, more storage, and more AI, it will need the specialized infrastructure that only Vertiv can provide.